Intermediate Accounting 6H Assets Exchange with Boot. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page or email on our website. I'm teaching my book, Cost Accounting for Dummies, free every week online. You can listen to a chapter each week for free. And here's my Twitter page. So this is a non-monetary exchange in which assets are exchanged without cash. That's what we mean by non-monetary. We'll define boot in a minute, but I wanted to note in red here that FMV is an abbreviation I'm using for fair market value, and you'll also see that in the industry and also on exam questions. So monetary consideration is also called boot. Boot can be cash, or boot can also be consideration paid of some other asset. In this case, the consideration paid is going to be a truck. Consideration you'll also see in a legal business law class, an exchange of consideration. It's not in this question specifically, but I'd always like to cover the term commercial substance. You have commercial substance if one asset generates more cash flow than another asset, which means in very simple terms that one asset is better than another if one asset generates more cash flow than another. If you see a question on an exam that says the exchange, quote, lacks commercial substance, that means that both assets generate the same level of cash flow. So here's my example with a truck given as boot or given as consideration, like a payment. A and B agree to exchange trucks. Here are the carrying amounts of the trucks and their fair market values. So here's the carrying amount and fair value for A. And you'll notice that for B, the carrying amount for B is not known. But we do have fair market values for both assets. And since A's fair market value is higher than B, B agrees to also give A another asset, a trailer, and that trailer has a fair market value of $3,500 to sort of even things out. Since A's giving up an asset with a fair market value that's higher than B, B says, okay, we'll give you the trailer, which is worth $3,500, because if I add these two together, $16,500 and $3,500, I get $20,000. So it seems to be, with fair value, more of an equal exchange. And the question is, how should A record the receipt of the truck? It should say truck. That's from an old question and I didn't change it. So A has to record something on the books. What would they record? Well, the first thing we need to figure out is A's realized gain. And you'll notice that there is a difference in terms here between realized and recognized. And the word recognized is what gets recorded in the financial statements. So the realized gain is the fair market value of the new asset that A receives, the $16,500. We're going to add in the boot, the truck, the fair market value of the boot or the truck that B paid to A, that's $13,500. And we're going to subtract what A gave up, which is the carrying amount of the old asset. And so we see, excuse me, that A has a realized gain, if I add those three up, of $3,000. Step 2 says, okay, if that is A's realized gain, what gets recognized? What does A record as a gain? That's what we mean by recognized. And we see there's a rule here that says it's the lesser of the boot received or the recognized gain. The recognized gain we just calculated in step 1. The boot received is the $3,500 trailer. So we recognize the lesser of these two, or $3,000. That is the recognized gain. And so step 3 is, let's compute A's basis in the new truck. Okay. Well, we gave up carrying amount of $17,000. That's linked in up here. We add in the gain that we recognized, not that we realized, but what we recognized, which was the $3,000. I'm going to link that. So you can see that it's linked, step 2. And we subtract the boot we received, 3,500, and so 16,500 is A's carrying value of the truck that gets recorded on A's books as an asset called truck for 16,500. Well, what if cash is given as boot? So same scenario, A and B exchange trucks. The carrying amounts and the fair values are the same as the first question, but in this case, B gives A cash of $2,500, and you'll see that if I add the fair market value of B's truck plus the cash, it equals A's truck, so things are evened out a bit when B pays the cash to A. And the question is, how should A record the receipt, again, of the truck? I've got to correct that typo. The process is pretty close to what we saw before, but a little bit different. Realized gain, the fair market value of the new asset, 17.5, and you can see that that's linked. The boot received $2,500 in cash this time. Fair market value of the asset given up we subtract. We get the same realized gain as we did in the first question, 3,000. But A's recognized gain will be slightly different because it's the lesser of the boot we received, the 2,500, or the realized gain, which was 3,000, and in this case we received less boot than the realized gain, so the recognized gain, which gets recorded in the books, is $2,500, the lesser of the two. Step 2 will also change step 3 when we compute A's basis in the new truck. It's the carrying value of the asset we gave up, and if I click on it, you'll see that's linked right there. We add the recognized gain, which again is a different dollar amount than before. We subtract the boot received, different dollar amount than before. We end up with A's carrying value of the truck, 17,000. So you can see that these numbers here, my screen paused a minute, are different from the gain recognized in the boot received here, which is why I get a different carrying amount in the first scenario, giving a $3,500 truck, than in the second scenario, where B pays $2,500 in cash. The answers are slightly different. So what we learned is that when we change the boot that we give up, that change in boot affects the recognized gain, and the change in the recognized gain affected the basis of the new truck. That's the end of 6H. We have our video textbooks including information in a longer form that's not, some is on YouTube, some is not. All of our YouTube videos are linked with hyperlinks to the website. For live one-on-one tutoring and chat sessions, here's the website. Again, Cost Accounting for Dummies, the book, is being taught live online every week for free. We do about a chapter a week on Saturdays. You can look at the website for more information, and here's our Twitter account. Thanks very much for watching, and we'll see you next time.